Greetings, greetings, greetings. You are now tuned into the vault. Trust Christian, own nothing, control everything. Just want to thank you for tuning in live or listening to replay. Really excited and appreciate everyone for tuning in live or listening to replay. This is going to be an episode here, the vault, episode 237, stock split equals corporate restructuring. And really excited about doing this episode here because there's so many people right now that feel like they're up. A lot of people are actually really confused. You all know in the description it's not to be confused with financial advice. The Vault's not a financial consulting company, actually management consulting. So we deal with management of assets, management of estates, and management in business in general. Everybody wants to be a business consultant, but what are you specifically successful in? So when we talk about management, that's what we talk about in the Vault is management. But we're going to talk about people that have come to us even within the heist, the great heist that just happened. And we're going to go ahead and talk about the great heist. Shout out to the Bronx. Thanks to Bronx, New York for tuning in live or listening to replay. We appreciate all the trustees, all the people that tune in live. Because we all know that why you're listening is to just gain some better insights so you can go out and question your financial advisors. Why didn't your financial advisors that work at these banks, these institutions, why didn't they come out and share with you all that there was going to be a stock split? Who do you think is heavily invested in Apple? Who do you think is heavily invested in Tesla? This is a company, Tesla, literally for what, 5 to 7 years said they've been read in the books. They haven't proven a profit yet. But that doesn't stop Elon from starting a whole damn company for spaceships. So let's go ahead and get into it. Episode 237, stock split equals a corporate restructuring. I appreciate Alaska for tuning in live or listening to replay as well. Everyone from that area. So we're going to talk about how a stock split is pretty much a corporate restructuring, ladies and gentlemen. You all know about what these companies just did. It's nothing different than when they did the stock market crash in 1933. The people that were at the top, they made all the money. The people that were at the bottom that had common shares, they lost money. See, when you go, if you don't know about what inflation is, this is a corporate restructuring, which is deflation, which is a restructuring. Appreciate Oaktown tuning in live. I always like Oakland, so appreciate Oakland for tuning in live or listening to replay. But corporate restructuring looks like this. You all say, what does a business in trust look like? Ladies and gentlemen, if you're not familiar with Google, they did it in 2014, 15, 16, 17. They're not Google anymore in the stock market. They have a Class A and a Class B and a Class C shares. So what just happened when you thought you were, oh man, they gave me 4 shares instead of 1? Guess what? You lost money. But hold on, they gave me 4 shares. So would you rather have 100% of 100, or would you rather have 25% of 100? Ladies and gentlemen, did you gain value on the stock or lose value on each individual stock? People lost value, and they're still wondering should they hold stock in these goddamn shitty ass companies. They're shitty. That's the bottom line. The companies literally in front of your face can steal your wealth. They're in with the government and they're stealing your goddamn money in front of your face. That's what they're doing. But we gave you 4 shares. We gave you 3 additional shares. At what cost? And then what happened? So, do you know about Class A shares? Do you know about Class B shares? Do you know about preferred stock and founder stock? What stock did you just get left with? You got left with the common stock. The stock that everybody literally, hey, we couldn't buy more stock at $100. That was a little pricey. But hey, how many common people can go buy the stock at $25? Hey, I'm going to tell my friends, I got 3 additional stocks and they're worth $25. Now, this is the play that they're going to play off. They're going to play off the play that, hey, the stock's going to go up in 10 to 15 years, 5 to 10 years, right? You're playing a long game. Ladies and gentlemen, we ask even people that we've came in contact with, do you get a dividend off this? What would you rather have a dividend off? The greater or the lesser? People they may or may not even be getting a dividend off the lesser now. Tesla's running around talking about, we haven't cleared a profit yet. But they're taking people's money through private investment. We're taking money through common stocks. That's how they're getting funded, by people pumping it. And guess what they just did? They dumped it. You never heard of a pump and dump? Google it. There's a pump and dump. We're going to show you what it looks like long term. See, a lot of you all haven't been invested in the stock market for over 25 to 30 to 50 years. But let's go to a classic pump and dump, classic stock split. Okay? This is what happens to common shares and preferred shares. You all can Google Berkshire Hathaway. Are you familiar about Berkshire Hathaway? You all get that are listening right now, share this with your friends. Go look at Berkshire Hathaway's Class A shares and their Class B shares. There's a dramatic difference. But how did the Class A shares get to be over the value of people's houses, but the Class B shares, they're under the radar, not even over $300? Because they did a stock split between common and preferred shares. So people thought they made it. That's called a corporate restructuring. We're going to make sure that not everybody sees our books. So when you're going to read their prospectuses now, and it says, oh, well, we have a private shares for the owners of the company. Do you hear the term private? So hold on. You just got duped for the lesser. Your financial holding is up for public disclosure, while the owners of the company, the owners of the stock, they're in a private position. Own nothing, control everything. They're in a position of, we don't need to disclose how much the value of our shares are. Hold on. So the value of the shares can be different? A versus C, A versus B and C? Ladies and gentlemen, this is why people get in the vault. For financial education. You have to improve your financial education. But how many people are walking around saying, hey man, it went down, so we got to go get more? And the owners of the companies are telling you they're not even claiming any money on the books. They're saying they're in the red. How do you think the United States is operating in the red right now? How? Because they know what corporate restructuring looks like. The United States issues derivatives. That's what was just issued. A new derivative of the company. It's a lesser. It's a derivative. You lost value based off of it being fractionalized. Hypothecated. Remember how if you give $1 to the bank, that's 100. How were they able to lend out $10 plus off of your dollar? It's called fractional reserve banking. Who do you think owns majority shares in these companies? Common stocks or the banks? You all can go look at these companies' investment portfolios and see how much institutional money they have versus common share money, common stock money. Ooh, it looks like the institutions hold it. So who can you trust in these days and age? Can you trust the institutions that are saying, well, hey, think about it. It's almost hypocrisy. The banks are literally telling you, hey, this isn't a good company to buy right now for X, Y, and Z market conditions. But guess what? Who owns the goddamn shares majority? The bank. The bank owns majority of the shares. And they're putting out propaganda through Market Watch, through CNBC, and all the rest of these financial companies. So who can you trust? You want to know what you can trust? You can trust the numbers. That's who you can trust. But if you don't know how to read the price earnings ratio, things that Warren Buffett always looks at, the PE ratio, you won't know what the hell you're looking at. You're just buying stock because it sounds good. I'm going to buy it because it's going to go up. Well, guess what? See, whether you know it or not, people in the trading world, they make money on the sell. So let's look at this. Did they, from $100 down to $25, did they buy or sell the stock? No one bought it. They sold their position. They took over half the money out. They halved the position. It's a sell-off. That's what you do when you're up in the stock. The owners, what did they do? They sold off their position, placed it into a private placement environment in a private capacity. While they showed you the true value of the stock, it wasn't worth the $100. It was worth $25. The institution said it's time to take our money that we gave you at the beginning. The VCs, the angel investors, the hedge funds. They all took their money. They sold their position. So who was left with the common portfolio? The same people that don't have a financial IQ. The people that are supposed to have a financial IQ. Because the financial institutions are only holding public people's money. It was a sell-off, ladies and gentlemen. What are you supposed to do? Buy low, sell high. Well, who do you think's buying again? And who do you think just sold? Did the private people sell? Or the public people sell? You see what happened. Privately, there was a sale that just happened. And public was disclosed that situation later on after market hours. They don't even do these announcements during market hours anymore because they don't want a stock market crash. Well, it looks like their stock crashed. Think about why Bitcoin and these cryptocurrencies are going to gain traction during these times. Because these fraudulent companies on the public side are doing heist like this. Well, the cryptos say we only have a limited amount of shares. Right? So we're not going to be able to do these fraudulent activities right here. Oh, really? And people are questioning whether they should go into the cryptocurrency world where account ledgering has to be accounted for. Has to be. It's encrypted. There's no shaking the books. There's no private parties. We're all private parties now. There is no common or preferred shares in the crypto. And people are questioning whether they still should be in it. The government, the so-called government, the so-called bank said, we're going to shake you all public people down out of it. They put who do you think owns most of the majority shares? The institutions went right back in after they shook you out. You know how many people we know, common people that made hundreds of thousands, they were millionaires off of it. I mean, how do you become a millionaire off of goddamn $10,000, $20,000 stocks in less than a year? And guess what? 3 years later now, they shook down. And the banks are in position. Yep. You want to know why the banks were willing to shake down these companies? Because they got Apple. They launched Apple. Who funded Apple? Steve Jobs didn't have any money. Who funded Tesla? He didn't use his own money. He used the bank's money. OPM. They got into the company pennies on the dollar, preferred stock. When it went IPO, guess what? They already made money. Ladies and gentlemen, it's time to increase your financial education. Consultations at the Vault help with this. It doesn't need to be financial advice. It needs to point you in a direction in which you can say, I can do my own financial research instead of letting my bum financial advisor over at whatever company that literally took a test on a piece of paper. He's not even invested in the same stock, has more majority share in the stock. He doesn't have a vested interest in the stock. But guess what? He took a license to say, look, a license test to say, if I give you any bad advice and you lose your life savings, you're not going to be able to sue me. It's called a disclosure. They put you on notice. At time to time again, I'm not a Nostradamus. So look, I gotta be able to let you know that if you lose some money, it's not my fault. It's not my fault. That's what happened on the public side just now. People just went through called a shakedown. The banks got tired of funding these companies that are operating in the red. And they say, hey, look, you guys just benefited off the greatest stock market rise back to stardom. The markets were up. They're up. Ladies and gentlemen, you know who the FANG companies are? FAANG? Facebook, Apple, Amazon, Netflix, Google. These 5 companies alone have the power to move the entire indices. Whether it's the S&P, whether it's the NASDAQ, whether it's the Dow. They have the power to move the indices. But what did Apple make? A phone. You can throw that in the trash. What did Google make? Google's based off of goddamn ad revenue. What is Facebook? Ad revenue. Netflix, ad revenue. Amazon, they're taking a more strategic position out of all of these companies right now. But they're still not producing anything. Do you have a product that says Amazon made this in America? No, they are a servicer. But you live in a house, and Toll Brothers and all these other manufacturers of houses, they're still building houses right now. They're still building multi-unit properties right now for people that are downsizing. What about farmers? People that are producing the crops. People that are creating alternative ways to house these foods. Essentials. When did Facebook become an essential? When did Amazon become an essential? When did Apple become an essential? When did Netflix become an essential? When did Google become an essential? It's a joke. It's a joke, ladies and gentlemen, that these companies have this much ability to control public perception. See, the top 5 companies, 3 of them are ad agencies, ladies and gentlemen. Are you serious? They're not even producing anything. They're just ad companies. Now you can see why they can dilute their stock. And they can get over on people publicly. We might as well say they're in bed with the government. The companies that are supposed to be, the institution that's supposed to regulate these private enterprises, how come the private stocks aren't disclosed? Because that shows you that there's public and private. Bottom line. That's the difference. Ladies and gentlemen, you have to increase your financial acumen, your financial IQ. A lot of the books that you read over the internet, they're a waste of time. You have to be able to go and analyze the companies directly now. You have to be able to look at them individually. Directly. You have to be the Warren Buffett for your family estate. Not, oh, I'm just going to leave it up to Mark or Dave over at, the financial company. And then when you call these guys and say, hey, did you know about the stock split? They say, no, it's just some news that came after hours. Well, what the hell are you doing over there? Ladies and gentlemen, go look at your mutual funds. Why are you still invested in non-technological companies right now? All of you all love technology, but you're not invested heavily in technology. Touchless payments. Who's in touchless payments, ladies and gentlemen? Samsung, Google, Apple. Did you all know that Google's trying to literally create an online bank right now? They're going to be just like PayPal, giving out loans to you shortly as a consumer so you can build up your credit profile. Are you paying attention? Can you predict the future, or are you stuck in the moment? The news is 2 days old. These news companies are depending on ad ratings. That's all they're depending on. That's all they're depending on. Who can you trust? That's what this episode should be. Who can you trust? When you're in trust, you can only depend on people in the trust. And if you're in trust, you got to be able to make the right decisions. Now, granted, inside of trust, you make the wrong decisions sometimes. But as you all can see, that's what a corporate restructuring looks like. It's where a company halves or less than's the people that don't have any value. Your money's worthless to them. That's why they sold off their position. And they're betting, literally sitting behind closed doors, betting that you're going to reinvest at $25 a share, telling your friends and family, this is the best time to get in. We know it's going to go up. It already was at 100. It's got to make its way back, right? See, this is called, the market can stay irrational longer than your bank account can stay solvent. We heard that years ago. That's where we are today, ladies and gentlemen. People are getting ripped off and don't even know it. They don't even have the financials of the company. These companies have told you in their prospectuses, they've told you in their quarterly earnings, they haven't made any money. Why is your money there? Well, because it's a stock. Because, it's going to go up. But financial education, you investing in yourself, you investing in your family situation, That's how you change the game for your family. Sometimes you just got to bet on yourself. Not bet on these companies to do right by you. Because they're not. Clearly they're not. They just took away value. It's a corporate restructuring. They want to stay. They wanted to. There's an investor named Ray Dalio on the public side, but he has a private hedge fund. He stays specifically under a certain amount of money, so the hedge fund's not considered a public fund. He has so much money in the hedge fund, they have a number that says if you go above this number, you're not private anymore, you're public. And he specifically keeps the fund under that. So it's like, well, damn, how is he growing the fund? He does a stock split. They do splits. That's what they do. And if you're not aware of it, you can get your shirt took too. It doesn't need to be financial advice. It's not. It's a conversation that was just had in the public by these goofballs that sit on TV that are reading off a teleprompter telling you, oh no, we don't know what happened either. They just announced after hours that the stock has been split, and this is going to help the company grow. And you know what they're doing it for. Tax purposes. You all know that. Right? Right. Appreciate you all for tuning in live or listening to replay. Christian at trustchristian.com if you want to get into trustee training or a consultation. But this is what we talk about in the private. We have a lot more candid conversation because people's families and lives are at stake. And these corporations, it's not that they have to care. They're an artificial entity. But if you don't do your financial homework on these companies, clearly you can see how you walking around with something that's less than for one share is worse than having just one share that's worth more. Go look at the Berkshire Hathaway situation. They have an A and B share. Which one do you want? But most people, they don't know how it looks over 20, 30 years. They don't know what a stock split is. They never experienced that in their life before. And their financial advisors are giving them half-ass information. And the guys sitting on TV, these guys are getting paid to be a glorified journalist. That's all they are. They're a journalist. They're not even an investor. They're not even professional investors. These people have no vested financial interest in what's going on in the marketplace. They're just people that are sitting behind some daggone TV and teleprompter screen talking about, hey man, this looks like a good stock. Why? Did you buy it? How much did you buy of it? Well, there's a lot of volume in it right now. Ladies and gentlemen, for all the trustees that have gone through trustee training, for all you all trustees that have went into Cornell's trading class, you all are in that group. You saw that Cornell was talking about gold this past week, has been talking about for the past 2 weeks. How many of you all have paid attention to gold alone and traded gold? When I deal with this brother's been generating capital the whole time. The stock split didn't affect him and our families. But how many of you all want to keep trading Forex right now? You want to stay stuck. Oh, let me do the NASDAQ. I got to do the NASDAQ. Let me stay on the S&P. Let me stay on the S&P. A senior trader that taught the class, people did what? They want to be Wile E. Coyote. Super genius. Instead of just sticking to the system of success. Someone that has a vested interest in the marketplace. Took capital and grew it. Just off gold alone. These things are predictable, ladies and gentlemen. When gold goes high, and when everything goes high, what are you supposed to do when it goes high? Sell. Isn't that at all-time highs? But people wanted to be Wile E. Coyote. Super geniuses. And this is why common people don't make money. It's because wealthy people put a complex system in front of people, but they do the simplest things to make money. This was a simple play for those stocks right there. It was simple. We're going to get high. We're going to sell off our position. We're going to maintain our privacy. While the public people that have to report the dividends and the yields, we're going to make them report. Some people think the market's going to go down for the rest of the year. Ladies and gentlemen, we're in an election year. Are you doing your financial research? What happens to the markets during election years? But this is a critical one. Why? Because you have one of the presidents in the United States that is focused on monetary policy. He is focused on building wealth in the United States. These are supposedly American companies. Why would their stock not go back up? So, okay, yeah, we got a stock split. It went down to $25 or whatever it went down to. One of them, hey, if it goes to 50, we made money. And it looks like we made even more money because we got 3 stocks instead of 4 stocks, instead of 1 stock now. So we have 4 stocks instead of 1 stock. Ladies and gentlemen, be prepared. We might end at all-time highs again this year. We really will. Because look who's in office. Tax breaks. I mean, the floodgate for financial liquidity is here. The wealth transfer is taking place in front of your face. But how many people are invested in their financial future right now? They're giving their money away to these companies. And guess what they just did? When you bought low, what did they do? They sold high. Now you're back down to some low number to put more money in and buy low. It's a habitual cycle of ignorance. It's game time, ladies and gentlemen. It's time to invest in your financial education. So when this year comes out and this election's over, you can start riding the wave. Because it's a wave that's building right now. They're talking about interest rates being low. People don't even know about inflation. They don't even know about prices going up. Prices are going up on things. Why? Because they just put a whole bunch of cheap market. So when the Democrats are talking about giving $2 trillion, why wouldn't the president capitulate to $2 trillion? Why would he not? It only helps him look good. He might only want to do $1 trillion. Well, guess what? The Democrats, they want to put in what? $2 trillion. Well, hey, I only wanted $1 trillion. The Democrats want 2. Hey, all of us are going to win. Let's create the win-win situation for everybody, right? That's how the market looks. But are you going to take advantage of that win-win situation? Or are you just going to be a beneficiary and a recipient? That means you're liable now. While the creators of the wealth, they're going to do stock splits. Decrease their risk. Corporate restructure. That's what they're going to do. To stay under the minimum tax liability. This is how it's done on the private side, ladies and gentlemen. I'm so happy all of you all could see that in the public. That's what happens in the private sector. They take things and do things like this, and it's almost theft. You guys don't even know. It's almost theft, and it's sad to see it. But how many people think they benefited from it? People don't even know what happened. They don't even know what the hell a stock split is. Still haven't Googled it, but they experienced it. But people literally experienced the stock split when Google did it. This is what happens in the public, ladies and gentlemen. Appreciate you all for tuning in live or listening to replay. Feel free to reach out, Christian at trustchristian.com. And we'll hear from you all soon. Peace.